Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 25th of February, 2019, just after 4:30 p.m. Central Standard Time. So yesterday we got late afternoon, a big surprise that the president had made his decision before he left for Vietnam that he's going to extend the March 1st deadline date on the U.S.-Chinese truce. Remember, we were supposed to get another round of tariffs and maybe even new items going to be thrown in. That is put in abeyance as the two sides made substantial progress. The problem you get with this is while the market is up nowhere near the highs of the day, a pretty good-sized sell-off late, and you have to ask yourself how much of this do you keep baking into the market, because yes, it's going to all happen, but logistically, you just don't turn the switch and everything's back to normal. Another part, how many U.S. corporations have stockpiled goods in anticipation of those tariffs? Now they're going to use their inventory up to get rid of products so they don't come back buying that fast. Another thing you got to think about. So, interesting times. When we take a look at the market, it's still another gain for the week. You've come straight up from in the S&P 2486.75, and here you are 300 points higher. It's massive any way you want to cut it. Where are we? We are in a resistance area. I know I've pointed this out over and over, but we're in that zone where this market's feeling its oats. It's come up a long way. That does not mean it has to break, but nothing just goes forever up. At least nothing I'm aware of my time in these markets. They can have heck of a run, and this is it, and I am not looking for this to end because a trade deal's better for everybody's economies. However, you're up at a point here where you keep going higher, and one of these times you're going to start making what's called a breakthrough, a previous low. In this case, it's the 2770 area. And when that occurs, you will look back at the market and say, now we're entering possibly a correction. That correction phase, if it occurs, I don't know if it's going to occur, but if that's taken out, could go to the 18-day average. If that gave ground, could go to the 100. Wouldn't surprise me. Where's the resistance? We have been mentioning the upper Bollinger Band. That number today is 2810. We got to 2814. So we did hit it. I think the pros were taking money off the table at that level, and they went home about 15 points better, 16 points better than if they had come out against that. I'm going to repeat, the support could be also the 200-day moving average of 2756. So you have layers of moving average support, but they're all underneath the market, as you'd expect in a market that's had this serious of a run. In terms of momentum, and this is what I keep looking at, it is just bullish. When you get a stochastic that embeds means both numbers are going sideways over 80, it's bullish. If you lose that and you close under the 80, if it doesn't regain it almost immediately, the odds favor price, and the closest of the major moving averages make a run. Could be in this case that 200-day average, but remember, you're going to jump this 18-day average still. That 18-day average is moving right now about 8 points a day, as you can see there, so it's going to be very close to that number. It's about 8 points away from it tomorrow or tonight when we reopen. In the NASDAQ, you ran into the same resistance. This is the 200-day average. You got up, challenged the upper Bollinger Band, got through it, and bingo, by the end of the day, you came soaring right back well under it. Yes, you have the embedded reading. That's good. But if you take out, either lose the embedded reading or take out this low, well, you're back into that 18-day average and possibly the 100 in the Bollinger Band, depending if a correction caught. Did it get any legs to it? So far, the corrections are minimal. You know that, I know that, and the trends are up. We're still up in the Dow, but I do think money was taken off the table against the upper Bollinger Band. You still have the embedded reading, and you're into the 200-day and the upper Bollinger Band, right into that Russell, and I'm going to repeat it. That's where I think money came off the table. I mean, what you should do when you're a chartist is throw the name off the chart. And when you do that, in theory, if you develop good charting tools, what happens is you should be able to do the same things basically over and over. You want to turn the noise of the market out. You want to turn, I think, the noise of a Chinese deal. I think this has been expected. I think the announcement of it is after the fact. I think that most people thought we'd get an extension. What happens from the extension? Well, that's another event we'll start discounting. In the VIX, look at how the market came off those just about the bottom of the Bollinger Band. It missed it. It did not get to it. If you get my subscriber video in the morning, I was talking about this. When you reopen, unless there's a bad event tonight, because of the trajectory now of what the slow stochastic's doing, it's probably going to lose its embedded reading right on the first print, which could put into play, again, that challenge of that 18-day average of closes. In the bond market, look at how narrow this is. I did a piece today for Bloomberg's TikTok, and as I was talking about it, it's the curve yield, and I said, the Fed's told you what they're going to do. They're going to be focused on the short end of the market. They're going to make this yield pretty much just go flat on you. I don't think that's bad for world economies for a whole lot of reasons, but we'll talk about that another time. But the pattern is not the best here. You've got the higher lows, but now you're starting to roll over with lower highs all into the 18-day average. This is a real sideways market caught in these tight Bollinger Bands. One would think, at least I would have, that the first impact off of hearing U.S.-Chinese trade deal coming alive would be bearish on interest rates because it should be better for the economy. Plus, it gets the Fed what? They're not looking at that data. Now they don't have to say to themselves, how bad is this going to be if there's a deal? They'll know that over time, it means things start picking up. In the 10-year note, you're flat in momentum. You've got lower highs, lower lows, and you're under the 18-day average. So at least this market's in a downtrend. I don't mean at least in a positive or negative way. This one's been harder to call than this. Take out, though, Friday's high, and that number's 122, let's see, 09. Well, that becomes a problematic part because it's the Bollinger Top's right above it. In addition, that would mean lower rates coming. Why would you get lower rates right now in front of a possible good thing with the Chinese deal? Just pointing it out. TLT turned itself down. Lower highs, lower lows. If it could get traction, maybe the lower Bollinger Band, momentum certainly down. You'd have to take out Friday's high of 121.95 to negate this. Now, you could turn this into an uptrend if you did not take out the 120.70 level and you took out 121.95. That would give you higher lows, higher highs. You'd still be fighting momentum. I don't see it just instantly flipping around there. In the dollar index, it turned bearish on the close. You now have the lower highs, lower lows, your first settlement again under the 18-day average, and momentum pointing down. So back into the bear camp there. In the eurocurrency, we're up at the resistance point. And to get this market more friendly, in fact, to get it friendly, it's got to close over that 18-day average. It's already got the higher lows. It's got the higher highs. Guess what? If you don't take out 113.96.5, and today's high was 113.87.5, if you don't take that out, though, and you take out 133.36, you re-enter the bear camp. You'd have lower highs, lower lows. Momentum would probably be flat at that point, and you'd put back into play the possibility of 112.57. In the British pound, it's all over the board. Trying to trade this market off the world news is impossible. Jeremy Corbyn now he's decided after he lost a lot of the PMs that were attached to him that maybe a referendum vote should be called. Well, if you think about it, that'll split the votes for Miss May now and makes things even more confusing there because if she thought she was going to get her hand at the last minute where her deal would be accepted, this could hurt it, not help it. In any case, you've got the higher lows, higher highs, supports back into these two layers in the market, but you are very overbought. Japanese yen is still bearish. Lower highs, lower lows, resumption of the downtrend with today's break. Will the market have enough steam to get to the lower Bollinger Band? It certainly has the embedded reading, which is bearish. Bitcoin is trying to roll its momentum right now. It hasn't done it yet. It's trying to. Tomorrow's going to be an important day. It lost its trend. It's got a higher high, lower low. Will support come in here at this 35.85 level? Then we get to the energies where all of a sudden with the president interfering in the market today by tweeting that OPEC should not do all the cuts they're doing. Remember, there's an April meeting coming up. Spreads narrowed in on you rather dramatically. You took the uptrend out of the market. You lost the embedded reading. If it's not grabbed back immediately tonight, the odds favor. You're going to the 18-day average. You're already doing it in WTI, as you can see, and you lost the embedded reading. Even gasoline managed to just sneak out at the end. I was watching this tick by tick. If it doesn't pick up, that market could be headed back to the 166.50 area. So these are things I'm watching. And with all the bad storms, and I know you saw them over the weekend, and the cold, I mean, it's really cold in the Midwest. We're not going back above freezing for any length of time that I can see on a 10-day forecast. What we get goes out east. Just soared again in this market. So you've got these nat gas markets that just seem to move in vertical patterns, probably pretty difficult for most people to handle. You know, one of the things that we like to do is offer our different programs to you, and our futures trading kit includes brochures from the exchanges, from us, gives you ideas on technical analysis, the 14 popular trading patterns, money management theories, they're in there, stop ideas, options, if you want to trade options on futures. 2 different venues for charting. One using what's called Java-based, the other web-based, so you can go either way. Then our handheld phone devices, in other words, the applications for both Android and the iOS operating systems. You put it all together, plus all the other goodies, the different videos on pivot points, or rune indicators and the like. We give you a complete package. It's free. Give us a call. You can go to our website for it. If you go to the website, you'll see other offerings. Choose what you'd like. Click up here, and away you go. I'm Ira Epstein. You have yourselves a good evening. I'll see everyone tomorrow.